how much right now fund is available to invest?
I will take 20 million. They had to learn a new way to build the company.
Today on the podcast, we have Rando Rannus, who's from Estonia, who's actually a business entrepreneur. And after he sold the business, they started a VC fund called Siena.
How easy would it get the money from your rich friends?
It's like, shit, who's going to give you, you know?
Exactly. So that's the
hardest part, right?
That's the hardest part. I'm not rich, I'm not poor, but I have a few money.
And in today's episode, we're going to talk about VC funds. We're going to talk about secondary rounds. We're going to talk about his own experience in kind of selling a business, his own experience, how they came up with the idea of the business, and many other useful things and tips for businesses or people who want to start businesses. And let's rock and roll. Good day, Rando.
Hi there.
Where did you come from? From which country?
Not far away from Estonia.
By plane, right?
By plane. I'm to be honest, you can come by car, you can come by bus, but I have traveled so much between Latvia and Estonia by car in the past. So it's like I'm happy now that I can fly, and in 30 minutes I'm in Riga. So
let's go. Yeah. Let's go. Those of you who don't know who you are, who are you?
In a nutshell, I think entrepreneur in different forms. I'm back in the days, 25 years ago, after the university, I started out my career in corporate life in PwC, doing consultancy, but then got fed up with the corporate stuff and launched a startup at that time when the financial crisis hit, coincidentally actually, with my university mates. And we did the full life cycle. We bootstrapped, we raised money from original Skype founders, we expanded and then finally sold to one of the largest media corporations in the region. And now I'm in the field of investments. So I'm running a venture capital firm, which is focusing on the secondaries sub-segment.
That was a quick kind of rundown of everything.
I was going to say, this is like a typical Harvard story, you know, founding a startup with your university mates and then searching for investment. Yeah. Can you tell us a bit more about the startup?
Yeah.
Sure. I mean, at that time, what was hot was internet advertising. So it was in that field. And actually, the story is quite interesting. We had three friends, and we decided, already went to saunas, a couple of years, and there's like talking, shit, we need to do something totally different in our life. Enough is corporate for this corporate life. And then one of our guys went to work in Silicon Valley, and then what we started to do. We basically launched the company, the legal company, before we had an idea. Mm-hmm. So we formed the company, and then we said, okay, every Sunday we have a pancakes or something, and then like one is in the other side of the world, we are here, and then kind of brainstorming ideas what to do. And over the course of, I think, like 4 to 6 months, we came up with the idea because we saw what was going on in Silicon Valley, what was kind of booming, and then we look at here, it's like this region is missing that, but the kind of a opportunity is there. And that's the story, that you can actually build a company doing kind of opposite, the contrarian thing, kind of launching the legal entity before you have the idea.
What was the name of the legal entity? Because you didn't know what you're going to do.
Again, funny story. So the name was Against All Odds.
Against All Odds.
Which basically says that everybody thinks that, the startup game, that out of 10 companies, 9 will go to bust. And against all odds, we should be the one.
Guys,
who will succeed.
You're fun.
Okay, interesting. But what was the initial idea, and how did you get your first, results, the first customers? How did that happen?
I think, that time we didn't have a lot of vibe coding stuff or anything like that. I think even Skype was a couple of years ago born. So and we didn't have technical skills. So what we had to do is, with the minimum budget we had to find somebody who will help us out to kind of build the idea what we had. And we managed to find kind of trusted partners, kind of third party, who helped us to build the platform that we kind of wanted to build, and we agreed kind of a rev share agreement. So we didn't put any money there to build a tech stack. And we focused only from our side to build a business, and that worked a couple of years. Eventually, after a few years, we had to split with the company and rebuild the whole platform. But that's another story. But anyway, I think that was our kind of a success, that we managed to find a third party and then put our focus only on selling and finding the clients and kind of recalibrating the value offering and so on.
And what was the platform about? I can't understand.
It's the business was basically simple. At that time, if you look, think back 20 years ago, how internet advertising was sold was that it was kind of as a print media. So if you know, the print media is like you have the daily newspaper, and then it's like, okay, the front page costs you X amount of money. Internet was sold the same way.
I was thinking, was there internet 20 years ago already?
It was. I mean, Delphi and I don't know, Inbox, Trojan, what do you have here? It was sold the same way. You wanted to buy a banner, so it was like one day for, I don't know, 1,000 euros or 1,000 lats or whatever currency we had that time. And that's it. You couldn't get any kind of guarantees on the impressions, clicks, whatever. And all the money in the market was concentrated on the top 2 or 3 portals. That's it. So what we saw, that internet is so fragmented. It's not about 1 or 2 portals. It's about the long tail, because you have the forums, you have the blogs, some affiliate classified sites where the people buy and sell stuff, all sorts of internet media, and people are visiting that as well. But those websites are not getting any ad dollars. So because they're too small, the media agencies, the clients will never find them. And what we did, we basically integrated them into one single platform, and we introduced in the market the ad network concept. So plus all the kind of optimization techniques and the CPM modeling, so cost per impression, cost per click modeling, which wasn't there. Google wasn't here. It was only Delphi. It was selling per day. So we brought this kind of innovation from the West to the Baltics at that time.
But that's super cool. That's like a Taboola, right? Like Outbrain, you know those platforms.
Yeah, I know those.
It's similar to those platforms, right?
Well, Taboola is more on an article-based kind of a network, but if you kind of compare it, Google Display Network.
Yeah.
So basically, but on a smaller scale, on a regional focus.
Still, it's extremely complex.
Yeah, but it's cool kind of business model, because it's super cool business model. Like Google Ads probably print billions every year.
But I'm happy I sold it, because nowadays I see Google and Facebook and everybody are crushing this because it's a global business, and being kind of regionally focused, it's hard. It's hard.
Yeah. But how many years did you work on that business? What was the revenue per year, and when did you sell it? At what point was it at the sale?
We understood that when we launched the business, we wanted to sell the business in 3 to 5 years.
Oh, really?
Yeah,
that was planned.
That was planned.
Okay,
that was planned, and we're not building a kind of a lifestyle business. We want to sell it at some point.
Why do you have that plan? That's so like.
That's very fast.
No, but just why did you kind of come up with your guys like, hey, we want to build it, sell it?
We don't. It's because you make money on selling businesses. Okay. It's not like a lifestyle business. It's not like a bakery or a car wash, or we didn't want to do that.
Okay.
So but it took a longer time. Of course, it always takes more time. And we managed to make the deal after 7 or 8 years.
And
7 years. Yeah.
How much the business was making? Like revenue, profit, clients.
It was less than million revenue.
Less than a million.
So it was profitable.
Okay.
So when the media corporation bought, in the next 3 years we doubled the business size.
Because you were still involved.
Yeah, it was a kind of the golden handcuffs basically concept. So you need to be there. We doubled the business, and then we increased the profits and got the earnout from there as well. So it's not a huge 100 million exit. Yeah. But it's a decent one. So I'm not rich, I'm not poor, but I have the FU money at least.
Okay, interesting. And then basically after that, you started in Siena, right?
Not yet. I started to look for a new idea. So I was mentoring some startups. I went for like 9 months to Bolt. To launch Bolt for Business. Then I helped one health tech again for, I think it was 9 months in the business development side. Overall, I would kind of define that period when you're kind of selling your business. So when you sell the business, you feel like I've done athletics in the past. So you win a medal, you go to the podium, and then it's like, I did it, yeah. And then the next, when you step down, it's like you're totally empty. You don't know what you're gonna do.
Then there's the downfall. You're like,
it's like
paralyzed
you're basically searching for the meaning of life. What should I do next? So I think the next 2-3 years went for kind of understanding what I want to do in my life, and I had this concept of trying to balance different things in life. So one thing is that, okay, I have some expertise in certain areas or contexts or networks. Then something that kind of makes a spark in your eye. So it's a passion. And then it needs to be bring some money as well. And there needs to be a balance between those. Mm-hmm. So, and it's really hard to find a balance because there's some things that you're truly passionate about, but you don't have skills. And you don't know about the money, or there's something that brings you money, but there's no passion in your heart. So, there's to find the balance. And so I was searching for different ideas, testing out. And eventually, I came up, or I had this secondaries idea in my kind of a drawer. And I got to know that my current partners were thinking on a similar thing. So basically, I went to them and said, "Guys, maybe we should team up and build something bigger."
Okay, and then it came up that this idea to build Siena, yeah?
Yeah.
And what is Siena? I'll put the website also, so maybe people can see and kind of understand. This is the website. Less risk and more liquidity for high growth startups.
Yes.
At Siena, we de-risk VC as a class with secondary investments. What is like a secondary investment for like everybody to?
Well, to kind of, let's say, to regular person to grasp the meaning is that usually how startups, when they fundraise the money, the money goes to the company.
Okay.
And they use the proceeds to hire new employees, spend on marketing to grow the business.
Okay.
And this is usually done, when you launch the business or you grow the business. But at some point, and in our terms, we are looking at companies who are truly scale-ups already in tens of millions or hundreds of millions of revenue already. So they are really growing super fast still. Imagine you are the first investor there, or the early employees or the founder, and you have been locked there for 7, 10, 15 years, and you have the shares, but it's like the bank will not give you a loan on those shares because it's thin air. Mm-hmm. So you need to have the cash, and we provide the liquidity or the cash for those shareholders, basically buying up their positions, or partially at least. So they get the cash, and our investors in our fund will get a piece of that success story. That's a kind of a simple way of explaining what the secondary investment means. So it's not coming into the front door, but through the back door.
I think it's a rather new thing in the Baltics for sure, if not in the Nordics as well. How come not many companies have tried to do it before?
I think the answer is that the whole ecosystem wasn't ready. If you look at back in the US, the first funds started out maybe 20, 25 years ago. So over the times, it has evolved, and the whole secondary market in the US is quite developed already. You have some brokers, you have platforms, you have funds. Last year, there were several M&A transactions. Goldman Sachs, for example, bought the Industry Ventures, one of the number one firms in this industry, close to $1 billion. There was some other platforms bought by JP Morgan, Charles Schwab. So the consolidation is happening already in that space. In Europe, we didn't have it. And even in this region, we didn't have it because we were so behind of the US in developing the whole startup ecosystem. So we didn't have the scale-ups. So how many scale-up Latvia has?
Two.
Yeah,
no,
something.
Like Printful.
And they merged.
And they merged, right? Yeah, interesting. But it kind of seems to me that this secondary round from, let's say I'm the investor who puts in the money in the fund and then they buy it. You're like kind of betting on, you have a good business that's like scaling and you're kind of betting that it will
continue to grow,
right? Yes. But it could also be the case where it's like overhyped. You know,
it can be. Yeah, it can be. And it's not only overhyped, but you need to take also account that we are buying usually a lower share class, meaning that you have the kind of different share classes.
Yeah.
And we are usually buying from the employees or the early investors. So we are kind of ranked lower. So we have a higher risk in that sense compared to the ones who are entering in the latest rounds.
Yeah.
So a discount is quite normal to ask because of this fact, and we need to take into account that maybe the company cannot raise any more money, or they will raise the bad terms. So there is still some risk. So it's not like it's a risk-free investment, but overall, if you look at the whole portfolio based, then it is definitely less riskier. Historically. 25% of all VC funds will not deliver 1x. Mm-hmm. So one of the 4 funds will not deliver you the 1x. In case of secondary funds, this is 1%. So 1 out of 100.
Will not.
Okay. Will not.
I will not. So
it's
basically
it's a safer bet.
But the upside is less probably, right?
Upside is you don't get 20x on from the fund, but you what we will kind of aim is to get 3 to 5x out of the fund.
And what time frame?
In shorter time frame, 7 years, because we're coming in half time. So the early stage funds usually have 10 years lifetime, some of even 12 years. But which is, to be honest, still in both cases kind of a complete lie, because none of the funds will manage to finish in 10 years. On average in Europe, the lifetime of a VC fund is 15 years.
Okay.
And lifetime means that like from the moment they raise money, when they invest,
and they close.
And closing means they kind of give the money back to the investors, right?
Well, they can actually give in the meantime as well, but selling the lost assets.
Okay.
So in that sense, but it's still it's a long time, and the fact that the exit timelines are pushed longer, this kind of builds a momentum for our business.
Okay.
Just to give you an example, back in the days when Amazon IPO'd, it was 3-year-old company, 3 years old.
That I didn't know.
Google was
crazy.
4 years.
That quickly, wow.
Now Klarna, last year IPO'd, so Klarna was 20 years old.
Oh, I also didn't think it's
That's the email tool, right? Klarna.
No. Klarna is the pay now, pay later.
Buy now, pay later.
20 years old company.
20 years old.
Wow.
Now imagine you would have been the first investor in Klarna. Would you be happy to wait 20 years?
Probably not, right?
Although it will deliver you a huge amount of returns, but you want to get some chips off the table in the meantime.
Yeah, that's cool. And how big is your fund right now?
We have several vehicles. So we started out in 21 with the Fund 1, but we have created kind of co-investment vehicles. Last year we launched the Fund 2. All kind of combined, the assets under management is about 80 million. So quite a sizable already.
What are maybe some of the coolest examples or success stories of your fund where you have like did a secondary and then it's like going like gajillion?
Well, I mean, Bolt was definitely a good case. I mean, we invested back in 21. I mean, the COVID was just kind of still we were in COVID times and everybody were a bit scary. But they came out so well from the COVID, and then there was like 2 funding rounds right after we invested. So it went up like more than 3x in a short time frame. But the best success story we have in the portfolio is this one, Aura Ring.
Aura Ring. I have the Ultra Human. I have the other one.
Come on.
That's a different one.
Yeah.
That's a different company.
That's the cheap version.
Yeah. Okay.
Absolutely not. But the colors are nicer.
True. Well, they have now different nice colors. They have the ceramic version as well, and you can have a pink one if you want.
I guess I'm the good Aura Ring customer because I have bought 2 Aura Rings. And I was one of the early ones because I bought it in it was like this weird color that it was like scratchy, but it was the most expensive one, just super scratchy. And then the last one I bought for my wife. Yeah.
So, but this one, it's again, we didn't expect so well it will grow. We underwrote that maybe it will have a 3 to 5 billion valuation at the exit time. At the moment, it's 11 billion.
And then when did you buy it? What was the value when you bought some shares from them?
Well, the official value at that time was 2.5, the last round valuation. But we, of course, got with a discount. So we got better. We have done quite well on that position. So quite surprised that they started to fly so well.
And how many kind of examples do you have right now where you invested in the secondary, but the share value is going down, actually, not up?
There has been. I mean, there is one unfortunate story. You probably know Starship Technologies. This is the last mile delivery robot in Estonia. It's founded by the original Skype founder.
It's called Starship.
Starship.xyz, if you want to find the website. So they are probably competing, they're in top 3 basically in the world in autonomous vehicles, competing with Waymo.
Wow, this is the thing? What does it do?
It delivers food or pizza or whatever.
Really? Super cool.
Autonomous deliveries.
Is it here in Estonia also?
In Estonia, it's in America. If you can see, it's like around tens of university campuses. It operates in snow in Finland, in Germany, in UK. So now they're cooperating with Bolt, Uber, etc. Coop also. So
and pretty much their only competitor is Waymo.
Well, there are different segments. There's different segments because they understood that they don't want to be on the roads where the cars are driving. They are on the sidewalks. So there's a different regulation. So it's much easier to roll out the business because it's kind of a pedestrian friendly. And the regulation-wise, it's similar to pedestrians.
I can still imagine some grannies kicking.
No. People are super friendly. They actually, when it's stuck in snow, people help it.
But this is the case where you bought it and it's going down. Why is it going down?
It went down. I mean, how to pinpoint the exact issue, but eventually it coincided with the fact that after 2022, the macro environment changed. The interest rates started to increase. The whole fundraising market changed. So they were relying on raising money.
Basically hype, right?
It wasn't hype. Well, it's because of the business model. They have to what they need to do. They have a 3 big cost centers. So there's R&D. They need to build the whole kind of AI functionalities and whatever. I mean, so that it autonomously delivers the food. Secondly, they need to run the operations because they're doing the operations themselves, and they need to build the robots. So you have capex as well. So it's quite expensive to build out, and the market changed. So they were trying to fundraise, and somehow I don't know why, but they couldn't raise at good terms, and they were kind of pushing. At some point, they had the runways was basically running off, and they had to raise money on not so good terms, and basically the whole cap table, not only us, but all the Daimler, Swiss Post, whatever, who had invested there, everybody got haircut like 10 times.
Super cool business. Didn't know this.
But it's I think it's one of those investments where you can say that maybe we were a bit too early because it's a category defining business and it will succeed. I'm quite sure in 10 years' time.
It's time, right?
But maybe we're timing wise we're a bit too early.
Interesting.
Actually, before we continue, what is this? What you have brought to us?
Well, you guys asked to bring a gift to the show, and I was thinking, okay, I don't want to bring a hat with a Siena logo or a T-shirt or something like that. It's like, come on.
And I was like, oh, but I love T-shirts.
It's boring. So I wanted to bring some quirky stuff. So, and it's kind of a. And you said you want to put something on the wall.
Yes, on that wall.
Well, it's a small one, so you need to find a bigger wall.
You're territorial.
So this is a poster, a movie poster.
A movie poster, okay.
Yeah. I don't know whether you know the person here, but this is Estonian former president Toomas Hendrik Ilves.
Okay, okay.
And it's a movie poster of a documentary made of him. And it's the name in Estonian, but in English, the title is "Rebel in a Bow Tie." You know, he was wearing a bow tie, why why it's a rebel? It's because he was a bit of contrarian in different senses, and you can see it from the film as well. And what is the connection, by the way? My colleague Rando is the co-producer of this film, and he and our whole team has been kind of supporting culture in different forms over the years, and the link with the kind of because Toomas Hendrik Ilves is also very well known of kind of the spokesperson of Digital Nation, and he was the one actually who pushed Estonia 25 plus years ago to for the Tiger Leap program. That means that every school should have a computer classes. So he has a long story about he has really super kind of a link to the tech scene. But what is interesting is that although this is a documentary, I actually wouldn't call it as a documentary. I would call it as a kind of a comedy show a bit. You should watch it. It has.
Is it already out?
It's out. It's I don't know in which platform internationally, but in IMDb it's 7.7, so it's quite high. And if you watch it, it's like The Office series.
Oh, okay.
Because
Nice.
you don't. It's not like you think of, oh, this is like a formal documentary of making speeches. The president makes speeches. It's like, no, you can see him like in a leather jacket or chewing gum, or then making a drink, going at 6 a.m. To the presidential kitchen to make some, I don't know, waffles or something in a bathrobe. You can see him. There was a disco in President this castle, and it's like, and the jokes coming from there. It's like it's really. Some of the critics said that is it a documentary or is it a mockumentary? Because it feels like it's a mockumentary, but it's a real life. It's a real life of president.
This was such a good representation of the movie.
Yeah.
Like,
So definitely, if you have time, just watch it.
Let's do it. And now let's do our activity, which we have planned.
yeah, it's going to be about investments. I'm sure you have invested in a couple of businesses yourself.
True.
Okay.
And can you hand me the glass there? So let's imagine that we have a couple of business
But
opportunities.
but just let's put so just maybe I guess these ones,
like this.
because I don't have enough glasses, I think. So maybe you can read us the things.
Yeah, so we have the oil mining business. We have AI startup. Data center business, space startup, news agency, I believe. News agency.
Maybe.
Why not? We can be new agencies.
New agency, maybe. And gold mining.
Just like maybe a company. That's just an agency.
Agency,
a PR
agency.
agency,
Yeah,
or digital
whatever.
agency. Or
Understand.
Yeah, classical agency.
Yeah.
And then how much money you want to, like how much money does you... do
How
you
much
have?
how much right now fund is available to invest?
Let's say I will take 20 million.
Okay.
20
So
million. So this is going to be 1, 2,
So now the question is, let's say you have a fund. Here are the opportunities you have to invest. The companies, startups, scale-ups, as you might say in your case, right? Because there are already some revenue looking to scale. Where would you invest and why? And how would you divide that money of investment?
I need to know more information about them. So I mean, especially AI startup. Is it a wrapper? Just or is it a fundamental
like
model? Fundamental model, or what is it?
I think let's try to be more generalistic. I think it could be like they don't tell you. They say unique technology, but you don't know. Many AI startups I think are like that, right?
True. Okay, I need to divide the money between those. I can already maybe decide where not to invest. That's the easiest.
Yeah,
so a news agency or a new agency? No way.
No way.
You need to say why not.
Why not? I mean, it's. I don't like the agency model basically because it's. One of the things I understood when I built my own business is that. And even before we were searching for the idea, I understood that I don't want to build a business that is reliant on people. I want to have a scalable business. Eventually, I found out that anyway, every business is dependent on people.
I was going to say,
but there's always when you have the agency, then it's usually linked to hours sold. And I don't like the business model of how many hours you can. Because there's 24 hours per day. So that's why I don't want to be in the agency model. The same, what the company is doing, PR, marketing, whatever.
Okay.
From the agency model, it can be built different type of business model, but then it's not any more agency model. It can be an AI startup or something else.
It's like a software as a service.
Exactly. So that's why the typical agency model, let's say in the marketing or media, there's like, client gives you, I don't know, $1 million to spend. You get maybe a few percentage from there, or you are a marketing agency, you sell your hours. It's like, no way. No, I don't want to do that.
I actually read, I don't remember, but I read some studies that right now some investment funds are looking for like these professional service companies to invest. Haven't you heard anything?
Yes,
it's like
because it's basically what is happening is that the new agency or the agency will be put together with the AI startup, or basically the AI layer will be
productizing themselves.
Exactly. So what with the AI will happen is that the whole processes within the, let's say, old business will be kind of made more efficient.
Yeah.
And then the kind of margins will increase. So that will happen, and that's much more interesting. So just an agency, no, thank you.
Okay. What else is a no?
Probably all mining. Just again, it's too dirty, and I don't like it in a sense.
Are there any startups in this field right now that are
startups? I don't know. I would put it into the traditional kind of infra field.
Yeah, it's like such an old school, old money kind of business.
True, but at the same time, we have gold. What's different between gold and oil is that, I mean, if you look at the last 10 years, what the gold prices have done, I mean, it's
pretty stable, right?
Not stable. It's 4 or 5x growth.
Oh, okay.
So it's quite nice growth. But again, I'm not sure that I want to have my money tied into the kind of a business that is kind of polluting the world. So I rather put it aside. Although I can invest into gold in other means as well, not into the gold mining in itself.
Okay. Yeah. Okay.
So we have a space startup, data center, and AI startup. And coincidentally, if you look at those, these are the old industries. These are the new industries. So
I was quite convinced you're going to invest in gold mining by the way how you spoke about it.
But why do you think like space startups is a new thing? Like we wanted to go to space, I think in like the 90s already.
Oh yeah, I mean, but it's.
But it's like nobody like does anything in that, right?
Well, if you look at if you think of the historically, then the space was a field where governments were kind of fighting.
Yeah, just like
Yeah, but it wasn't the field where private companies would
do something.
do something. But
they don't even get to that.
Yeah, but now after the kind of SpaceX came, and you basically see explosion of new types of space startups. I mean, just one of our target companies, ISAI from Finland. I mean, it's a unicorn status now, helping Ukraine to win the war. But what they built the small miniature satellites, and with a fraction of cost of the big satellites, and giving this same quality or even better imagery of the Earth through the clouds or whatever in nighttime, whatever. You can basically get the picture of a tennis ball on the ground.
So I also think there's a lot happening in the space investment world and startup world. It's just that somehow news don't talk about it, or we don't hear about it a lot.
I think in the next decade or two, space will definitely be a new frontier for the startup investments and success stories coming out of there, and especially looking at the sovereignty issues, because now the US versus Europe, I think Europe will invest more into the space. They want, because if you're reliant only on Starlink, so you have an issue. So definitely.
So how much?
But on the space part, I actually have a friend who has a business. Okay, it's not maybe space, but he sells stars. So he sells stars.
Oh yeah.
But I guess it's a gifting
virtual.
Yeah, virtual star, like certification. And then there's like multiple companies that do that, and all of them have their own certificates. You have a star. It's pretty cool. They do like crazy numbers on PPC and
That's amazing. I only knew about selling turtles. So I supposedly own a turtle in Costa Rica somewhere, but it's all virtual, So I don't know. So I got,
really? Turtle?
Yeah.
You can also buy elephants and tokenize them.
Ah, okay.
So you have your virtual.
Yeah, I'd prefer. Now I want a star.
Okay.
But let's go through the one.
Yeah.
I'm just thinking how much to allocate the capital. A data center is definitely a booming business, and it's an infrastructure investment. So I see that it's kind of selling shovels when everybody is in the gold rush. So that's kind of I see that it's a kind of a more stable investment. These are kind of a more riskier bets. AI startup, it really depends on whether it's a wrapper or it's a foundational model or what is it, because it can be whatever, and who is the team and so on. So it's a hard choice. I could easily put 0 here, depending on what is it, or I can put really a lot here. For example,
it's an AI startup which you would believe in.
For example, I came across just a few days ago with a really exciting startup. I think it was called Pulsio or something like that. I would call it Lovable on steroids in a sense. What Lovable does is you can wipe code your app, website, whatever. They go further. You can build your business. So they have basically, it builds the service for you or the app or whatever. And then it can do the marketing. It can do...
What's it called?
Pulsio.
Pulsio. I need to check it out, the exact name. And then they have grown in last couple of months already in, I think, few millions already. And in 3 months, they assume they will be in 100 million revenue range.
That's crazy about these AI things, like how fast businesses are reaching this 100 annual recurring revenue.
So it's a tough choice how to allocate, but the easiest is to allocate in a way that it will be kind of equal. How much should I put then?
This is like a educational session too about investing.
Is it equal? No, almost.
So you would do equally on all 3, right?
Yeah, I would put equally. Then I'm kind of managing my risk more.
Okay.
And I have some cash left.
On currently your fund structure, what is the percentages? Where do you kind of allocate the money you get from the investors?
So whether we do equal bets or do we
Yeah.
do?
How is it maybe structured right now?
We have kind of had kind of a range.
Yeah.
So it's not equal, but the range is actually depending also on the how much supply is available, what is the risk associated, and so on. So how we see the company from the risk and return perspective in our portfolio. So it's not equal, but it doesn't deviate like, I don't know, 10x.
Okay.
So it's more like maybe twice a different size difference.
Maybe you are actually working inside of a company called Bolt and other startups which are like right now kind of in this billion plus valuation. Maybe what could you share that you have seen right now in 2026? What are these businesses doing that's helping them to actually get more customers, keep customers longer, kind of what are they working on which maybe we are not seeing, which other people who have a business, maybe a small business that want to kind of also grow, what we could learn, do, what we need to focus on, what you're seeing in the space?
I'm also a member of Estonian Founders Society. I was one of the founding members back in 2009, so 17 years. And last year, or a few months ago, there was a kind of a gathering, and there was a survey among founders. Okay, what was the keyword that defined 2025?
Oh.
And number one keyword was AI, of course.
In 2025?
Yeah.
Okay.
So. And I think everybody in the industry are kind of looking how to utilize that in your benefit, one or the other way. And I think one of the best examples within our portfolio is a company called Katana. It's a cloud inventory management for small and medium-sized manufacturers, having clients across the globe, but mostly in the US. They have investors like Atomico, Notezone, and so on. Quite a strong cap table. And last year, because of the tariffs stuff, and 2 years ago, the tariffs and stuff, so the growth wasn't so quick anymore, and they understood that okay, it will be hard to fundraise, and they need to kind of extend the runway. So what they did, they basically laid off almost half of people, and they decided to go all into AI mode. So all the engineers, the product managers, and so on, they had to learn a new way to build the company. So, and what happened because of that pivot, there suddenly was an interest to invest into them, and they got a nice up round from the previous round. So that was in a turnaround that happened such a short time frame, like in less than 6 months time frame, and now they have it twice as less people doing more. So that's a incredible story. So I think we will see similar stories in other startups as well, that with a smaller amount of people, they are delivering more.
And actually, on this note, how do you guys evaluate startups when you look into investing?
Well, we have certain metrics that we take into account. So these are like traction metrics that you need to have at least 10 million annual revenue, growing 50% or faster, exit timeline 3 to 5 years, valuation 100 million plus, strong investors in the cap table. Is there some exit dynamics already happening that there are some preparations already or thinking about the exit? So these things are important. We look at the capital structure. We look at the whole business model. What are the risks there? It's different type of analyzing compared to early stage investing, where there is a guy, a dog, or a girl and a cat, and you need to believe in the person and then the story. So it's a different case. You have more data points to rely yourself. So different aspects that we take into account.
So we are talking right now about many business models, but actuality, like venture capital fund is also like a business model.
It is.
Right? And you're the owner of that fund. Like, how is that business kind of maybe to an outsider or who never has experience in running a VC fund? How is that business working? How do you make, like, how is it that compared to you doing a standard business?
Well, the typical fund model runs in that way that there is a fund manager, let's call it a general partner, who invites other investors to invest into a fund. And those investors are called limited partners. They invest into the fund, and the fund will gather a certain amount of money, let's say 10 million. And the fund has certain economics agreed in the investor agreement. There is, for example, that how much the fund manager can charge the management fee, and what is the kind of a profit sharing scheme. It's called carry. So these economics are defined. So basically, how the fund manager makes a living is on the management fees, and what puts a spark in the eye is also, of course, the profit sharing. So when things go well, then you get usually the model is 220, 2% management fee annually, and then 20% profit sharing, 80-20 sharing. So let's assume that there is a 10 million fund. It will double in 5 years. There is 20 million. So 10 million is a profit, 80-20. So 2 million is the profit that will go to the fund manager.
And how you describe, like, you know, how you should, I guess, maybe. So every business typically has the limiting factor or one thing that is going to be the most important thing to kind of solve. Let's say it's a cleaning company. The most important thing is how you retain, train staff so they keep doing, because demand is very big. Let's say a marketing agency, one of the biggest levers probably is getting customers, right? That's the most focus. For a VC fund, is it like how to get rich people to give you money, or is it how to pick the opportunities where you put the money? Or what's the kind of the key to that business if anybody is like, hey, I want to start a VC fund? You know, it's like, sounds pretty cool.
Sounds cool.
Because, you know, you just get people to kind of pitch to you. You're never selling anybody. You just need to have, I guess, rich friends who give you some money to...
someone else's money, and you just operate and get 2 million.
Well, basically you're answering the question yourself. How easy... I'm asking from you is how easy would it to get the money from your rich friends?
I don't think it's easy. It's like, shit, who's gonna give you? Yeah, you know.
Exactly. So that's the
hardest part, right?
That's the hardest part, especially at the moment. I would say I think maybe 5 years ago when there was ZIRP area was that zero interest, and you got new unicorns minted out every month. Then it's like everybody was so risk-taking and bullish, so that's like, they take the money,
my money
and that's just bring me more money, and that's. But now it's shifted, and it's definitely much harder to find investors, not only early stage funds but all sorts of funds, I think the key to the success is fundraising. When you want to, as a, let's say, newcomer to the industry, it's super hard because you need to have something tangible to show to the investors. I mean, either you're a successful entrepreneur or you are a super good investor in some of the larger VC firms. You have done it in the past. You can show your track record that I was the one who invested
previous
into that.
Success.
So you can, and then you can go and kind of fundraise. If you're just Nix from Latvia, then it's you need to have a really good network of friends and
just like, hey, we have this fund. It's gonna be good.
But I mean, eventually you need to do it. It's. I think I was probably blindly stupid and didn't know how hard it was. So it was kind of just grinding and doing it over and over and talking to people and explaining the same story on and on. And we got 80 investors, plus more than 80 investors invest into our Fund 1. And most of them are private investors, either successful entrepreneurs from old industry, or then from the new industry, like the founders of unicorns, the first employees, or the angels who have done well. And well, you have, in order to get that 80, I think we had to go through 500-600
people, right?
Yeah.
Are those meetings
wow.
or just like sending an, hey, are you interested? And then
There's a mixture. There's a mixture. You know, the funnel. So
Yeah.
basically, it's you get. I mean,
pretty
you
good.
send out, then it's like no response, or you get some
Yeah.
response, or then it's like, oh, I'm interested. Let's have a call. From the call, okay. It's like it's a funnel.
It's pretty.
But
I think it's
but let's say 15% hit rate. I thought it's like, oh, it's a low. But when I've talked to other guys in the industry, they said, wow, that's good.
super high. Yeah,
So that's good.
Yeah, it's super high.
Because I know some guys who have said, oh, I have like 2,000 contacts in my CRM, and my hit rate is 1%.
There we go. That's more what I see in my CRM. It's
Because
like-
I had some people also from different venture funds here, from Lithuania, Latvia. So it's I think it's super high.
Well,
super
probably it's because of the nature of what we do. So we're not selling only ourselves, but we're selling. We can show what type of companies we go after. When you're in early stage venture, then you're like a Forrest Gump in a sense. You know, box of chocolates.
Yeah.
But then it's
You,
also
you never
like a
know what
startup.
you're gonna get from the box of chocolates when you're investing, because it's a black box.
super risky, right? Super risky.
Black box. Like the
Or,
German.
or I think the newer way right now was using government's money or like European
But
money.
but that's a problem, overall problem of Europe, that we don't have the private capital so much available. I mean, in US you have the endowments, you have a large family office, etc. In Europe, even the pension funds are not investing. I mean, in larger countries, in the Baltics, that they are doing. I mean, we are okay, more or less. Although the reforms that happened in Estonia, that was in Lithuania, now this year, they're basically killing the market. So we will have much tougher time as well. But overall Europe, we are missing the private capital.
Are there any specific reforms which you're talking about?
In Estonia and Lithuania, basically,
Because it sounds like it's coming to us.
No,
It happened there.
There is a risk that politicians copy bad ideas, so it might happen. There's a kind of in pensions you have like different pillars, and there is one kind of a pillar which is the obligatory system that you need to collect. And what they did, they basically said you can take out the money.
Okay.
And what happened? A quarter of the people took out the money. And, the initially politicians said, oh, you have the liberty to invest where you want.
Doesn't work like that, really.
What people did? They spent it.
Shopping.
Paid out their SMS loans, which might be good sometimes, but overall, only a fraction came back to the market in some sort of investments. And what will happen in 20 years' time? Those people who basically took out the money, they will be even poorer. So that's the fact.
I think we're really missing still some financial literacy in the region.
It's not about the literacy. It's like a stupidity of politicians, I would say. We had everything set up.
That's on politician side, but on the consumer, on the normal human being side, I think we're kind of a bit lacking there. That's why the mindset is there. Like, I should take it out and go shopping instead of investing and thinking more long term.
Well, probably, people seeing that, okay, I have 5,000 saved. 5,000, that's nothing. I mean, but they're not thinking that after 20 years, this 5,000 will be 50 or 100,000. They're like, 5,000.
What are you seeing currently in the market in terms of kind of sales, purchasing? Are you also experiencing from the portfolio of companies you have invested that everything's down? There's a crisis coming. What's the situation? How do you see in their businesses?
No, I mean, I don't see. Startups are agile, so if something happens, they need to adapt quickly. And I don't see a huge. Maybe we have selected good companies and they're doing well. That's another story. But I don't see a huge issue. Even when war started out, I mean, everybody kind of adapted quite well, and most of the businesses are online, so you don't have a real assets kind of link to that. So it's a different story.
When you said war, I was going to ask which one. But let's
Ukrainian.
Yeah. But you've been engaging with the Estonian startup ecosystem,
Yes.
right? And what are the differences, or why they are slightly more successful than?
Maybe they have like more unicorns, but the economy is I think
And that's
smaller.
a result. That's a result already.
Yeah, that's an outcome, right?
Yeah.
But Latvia also
where's
has a lot of cool tech startups. It's not like they're not. They're not just in this 1 billion plus valuation level, right?
Where the thinking is different, maybe between.
And is there something different? Because Latvians say Estonians are slow, and Estonians probably say Latvians are slow, maybe.
No, we don't say that Latvians are slow.
Oh, yeah?
You say something else. I feel it.
We know, but it's we say that Finns are slow, but
Finns are
Just like, give it to the next one.
Exactly. No, but there is some mentality differences, definitely. I think Estonians are more down to earth and more oriented on cooperation. For example, when the Founder Society was launched, everybody in the ecosystem are super helpful.
From the companies inside of it, yeah?
No, yeah, I mean, everybody helps everybody. And it's similar to the Silicon Valley mentality. Even if you're in competing companies or like you're not in the same company, I see from the Slack kind of a community that everybody asking or somebody asking a question, then it's answering. Somebody else has had with the same situation and explains, okay, we did this and that. So it's super helpful. I feel that in not only Latvia, but it's in other countries as well, and Poland, and it's like it's trying to. Like, the hands towards yourself, me. It's like not sharing and not helping. It's a bit shifting now, the mentality, but because you have the startup house here as well now. It's like changing, but it's, I think I don't know where it's coming, but it's protecting. I have a kind of cool kind of a metaphor for that. I mean, imagine you have an idea, I have an idea. So if we keep the idea, how many ideas you have?
0.
No, 1. You have one idea, your own idea.
Okay.
I have my own idea.
Okay.
If we share the ideas, how many ideas you will have then?
2.
Exactly.
Yours and mine.
Exactly.
Yeah.
So you are already winning.
Kind of like if one wins, then everyone wins. In a way.
And then at the end of the day, the idea doesn't matter.
The idea doesn't matter.
The execution matters.
Yeah.
So
yeah, and I think with our podcast, what we're doing in, especially in Latvia, which we started 7 years ago, it's exactly the same thing. Because at that time, like there was nothing. There was in Latvian YouTube, there were 0 videos where somebody was showing a bank account, like no showing kind of proof or examples. And we were the first ones who were actually doing that. And then the guests were coming, and the first question was, "Hey, what's your name? Okay. How much money you have?" Like, in Latin, it's like, what the hell? It's like, who's doing this? That's like very interesting. It's the same kind of idea.
Yeah.
Not that I can win, you also can win.
Yeah.
It's just like, there's like so much opportunity, so many people, so much, and people are getting more and more every day. And people from these like third world countries are coming inside of the market, right? Because on YouTube, by the way, for some big business creators like Alex Hormozi, he's one of the biggest YouTubers right now on YouTube. He has the most views from India, actually. Not the US. It's like India. Yeah. Because India is like huge.
Biggest country in the
world.
world.
Yeah, it's like super many people. So maybe last thing today, what is something that we have not discussed or asked you, which you think is we need to talk about a little bit? Like our last topic.
Damn it. I think we can talk about why we do what we do. One thing is the making money. It's like, of course, everyone wants to make money, but
Fact.
but it's what is the kind of mission behind it? The kind of, and we believe that by doing the secondary investments, we kind of help to spin the tech flywheel faster in Estonia, Latvia, Lithuania, and Poland, where we operate everywhere. So, and we have seen it in the past as well. We have made transactions with early employees who have got the money and they've used the proceeds to finance their own startup. So there is a new startup born out, or there has former employee who used the money to invest into his own venture capital fund as a kind of a own commitment to the fund. So I think that's important. That it's not about that the money leaves the whole ecosystem. No, it doesn't. The money stays here and it helps to spin the flywheel further and further, because new startups will be born and new ideas produced, new businesses launched, and everything goes on and on and on. It's like you asked about why Estonia is successful. It started out from one thing, Skype. Then you know that the first employee of Skype was the founder of Wise.
Mm-hmm. I've heard that story.
I didn't know that.
Then the first employees of Wise are now startup founders themselves. For example, Lightyear. I don't know.
He was in the show also.
Exactly. So Martin. So one of the first employees there. So it's a cascade, and it will continue to grow and grow. And we want to be part of that, which helps to kind of further facilitate that kind of a waterfall or flywheel to kind of go further.
And thank you for coming today on the show, because this also might spark some ideas in other people and in other businesses, so they can grow and get further. And so it's
exactly.
Cool.
Fingers crossed.
Fingers crossed.
Thank you.
Thank you.
Cheers.